Hi, I'm Dave Purdy, founding partner of Wealth Management Midwest. Attached to this short video is our June market commentary. And say, I just wanted to kind of kick off on a few things. Gosh, first of all, you know, the stock market, it's been doing very, very well. We had the best May since the 1950s. I mean, we had the best May since the 1950s. That's a long time ago. And then on top of that, you got the Dow Jones rallying over 51,000 for the first time. I mean, can you imagine 51,000? And then on top of that, now we've had a little bit of some drawdown the last few days, but before that we had a 9-day winning streak, very rare for the S&P 500. So markets have been really performing well. And it was interesting, I saw on CNBC, they interviewed the CEO of Bank America, and they said, why is the market doing so well? And he said, well, people are working, and when people work, they spend money. And so with the unemployment rate still around under 5%, if I want to say it's 4.3% or something like that, people are employed, people are spending money, and things are really progressing really kind of nicely. I think on a couple things that to me that are very, very interesting that according to the Wall Street Journal, this is really an interesting statistic, but 42% of the college graduates in the last 36 months, so you take 42% of the college grads in the last 3 years actually are working in a job that does not require a degree. I mean, can you imagine that? Can you imagine graduating from college? I was thinking about this. Can you imagine graduating from college with a degree and then not getting a job that uses the degree? And then I was thinking to myself, I actually graduated from college in 1981. For those that were around back then, that was a terrible recession. And I graduated from college. I got a call from my father a couple of weeks before graduation. He said, what are your plans? And I hesitated because there were no jobs. I mean, and he said, well, you know, you can't really come back to the farm. You've just kind of, whatever you're going to do, just God love you. And so I called my friend and I moved on to Chicago and I started working at Louis Pizza as a bartender. And the nice thing about that was I got free food, and then was getting some cash bartending until I could get a job. But I think what's going to happen is when these college graduates and the younger people, let's just say ages, you know, from early 20s to maybe the early 30s, it is a concern that they're not working and getting good jobs, because that's the future of the whole economy. The other thing too that I thought was kind of interesting, if you look at credit card delinquencies, and so I'm saying this because our office, we don't have rose-colored glasses on. You know, we're on top of this, but credit card delinquencies right now are about 13%, and that's the highest since the 2008 Great Recession. So credit card delinquencies are going up. However, because companies are still earning money hand over fist, and because unemployment is low, and because interest rates are basically stable, I mean, they would be nice, I guess, if they were lower. But we just want to keep exercising time and patience, and it's really hard to time the market. This market could keep running and going and going and going. So if you have any questions on it, please give us a call, Chad or myself, and we'll look forward to being in touch.